GoldBroker.com own real physical gold and silver bars stored outside of the banking system.
My name is Dan Popescu, and on behalf of GoldBroker.com, I have the pleasure to speak today with Gordon T. Long. Gordon T. Long has 40 years career in technology, senior management, and investment finance. Senior group executive with IBM and Motorola for over 20 years. Spearheaded international subsidiary and distribution startup operations for high-profile technology firm. Founded LCM Group in Paris in 1995 to specialize in rapidly emerging internet venture. He is now financial writer and commentator since 2010 at GordonTLong.com. Hello, Gordon.
Good morning. Pleasure to be here.
A pleasure. It's been a long time I wanted to speak to you. I read and I listen to your comments, regular comments, and you had some interviews with one of my favorites who wrote a great book when nobody was bearish on the dollar crisis, and enjoyed it very much. You've been concentrating a lot on the financial repression lately and the interest rates. Can I have your comments first? We have actually yesterday and 2 days ago, I don't know if I should call it a cacophony from the Federal Reserve governors. We'll raise rates, we are not going to raise rates, confiscate, not confiscate. What is your opinion about it?
I guess the mixed signals, I would argue, are actually somewhat calculated, having said that, because we're getting tremendous mixed signals, not just from the Federal Reserve, but from the ECB and the Bank of Japan and also the Bank of England. On rates, specifically, I think the Fed will actually move the rates up a quarter point on the short term. I think they're beginning to be baked in. Having said that, the future of increased rates is not in the cards, in my opinion. I would argue, and I may startle some of your listeners, I think the 10-year bond, the 10-year U.S. Treasury will be trading closer to a 1% handle sometime in the next year to 18 months. That is actually totally counter to what the Federal Reserve is trying to signal, because right now we have a global slowdown that's actually unprecedented right now. And I would argue it's even more serious than we saw going into 2007, 2008, in any measures that we could get into if you like. And it's now washing ashore in America. We have definitely on the verge of, we're getting many recessionary signals in our work right now that's coming to America. And unless liquidity is increased quite significantly, unless credit is growing at 2% rate, and we're not there, we've fallen off that kind of credit rating, we typically fall into a recession. That's the headwind that the Fed is now facing. So they're trying to talk it up to create some level of stability, but I think they will fail. And very quickly, they will be fighting recession worries and the global concerns. So we may get the quarter point, but I don't think anything more. And the long bond, actually, what we're going to see is a change in the whole yield curve. Usually when you have a recession coming, you get an inverted real yield curve. But when you've got almost zero rates, how do you get an inverted yield curve on it? So really, it's a flattening. And the back end is going to come down. It's my opinion, too, that they're going to fight this with negative nominal interest rates. And I think that that's in the future. Right now, as you're well aware, Dan, we have had negative real rates, low rates, but with interest negative rates, which is a confiscation. And so, but I think we're going to be forced into negative nominal rates, as we're seeing in bonds around the world. We got close to $5 trillion in bonds now trading at negative nominal rates. And that's an indication of what I just said with slowing down. Because the last point I make, the core issue is the governments of the four countries, areas I just named, are fundamentally broke. And the debt, even if we accept that in the United States it's $18 trillion, which it isn't, it's much higher, you can't finance that by increasing rates. So I'm not a conspiracy buff, but they got to keep the rates down at this level, if not lower, to keep the economies going right now. And they've got no choice. Whether they fully know it, fully appreciate it, whether it's some kind of strategy, we can debate all day. But the realities are that if they do not stimulate or put more money out there, we've got a serious global problem. We already have it.
They don't seem to get any inflation. They are looking for inflation. They are not getting it. Could it be possible? I read a note that Yassim Taleb wrote a few years ago that we might not see inflation. We might go from deflation to hyperinflation. What is your view about that?
Well, first of all, hyperinflation is a currency event, first and foremost, and that is with a lot of lost faith in the currency precipitates prices shooting up. And I've studied 52 different examples of hyperinflation, and they're very short, very abrupt, but it's always about currency. It's my opinion right now that we're in the midst of real deflation. Yes, we have inflation. Anybody that shops at a store knows we've got inflation in certain areas in things that we need to live on, and we typically pay cash in versus what we finance in regards to like assets. But we're in the middle of a deflationary period right now. Commodities are the most blatant example of that. Ever since we went off taper, ended taper, or actually announced taper, in commodities have went straight down. We're seeing it in oil prices, copper, right across the board. But that when that ends, and it is getting towards the bottom of this deflationary cycle, and it will end. And so therefore, the Fed is trying to create inflation, and it is failing miserably, as is the ECB, Bank of Japan, and the Bank of England. So they're going to have to bring out policies to create that inflation. That's why I think you're going to see overt monetary financing called helicopter money. You're going to see this negative real rates that I've talked about. I think you'll see something else called quantitative four, but it isn't quantitative. It won't be called that. It'll be called something else to push try and push at the inflation. But until they force that $3 trillion that's sitting in excess reserves out of the Federal Reserve that the banks hold, you're not going to see that. But that's coming. And so we will finish this deflationary period. Then you'll get inflation, and then you'll get hyperinflation. But that inflationary period, as the money velocity shows right now, which is still falling, but you're seeing M1 and M2 starting to change, if you notice the curves there. It's going to turn, and we will see it, but not yet. And there's going to be people stunned.
You think, Gordon, that there is any coordination between, let's say, the G7 or maybe the G20 when it comes to currencies, or is there a currency war? There are two schools that I see on the internet. Some are saying that there is coordination, and especially between the European Central Bank, the UK Bank of England, and the Fed. And others are saying, and it seems to be quite an evidence, that with the interest rates there is kind of a currency war. How do you see the dollar? Some people are saying that the dollar cannot go up. Technically it says broken in some kind of a downtrend, and some people see a bull market in the dollar as it was in the 90s. Others are saying that it's impossible, that it's starting to hurt already the United States. How do you see the dollar at this moment and these currency wars?
Everything you just said is right, and for the people that say that these things, they're all happening together, and it's who's doing what. Let me just start with, is the currencies being manipulated or controlled by the G7 you mentioned, or the G20? I have a different description. I refer to it as the currency cartel. And that is, right now, 95% of the currencies that are traded are four currencies: the euro, the dollar, the yen, and the sterling. And so when you control 95% of the world's trading currencies, you have a pretty dominant position. You'll notice they're also the countries that are the most bankrupt, the ones debasing their currency the most, and the ones selling their gold reserves, or have been theoretically selling gold, assuming they've got some actually left. Their job is to debase the currencies because of the size of their debt. And effectively what they do is, if you're all debasing together, where do you go? If you got no other options, you got to it's like the frog in the water, and you keep turning up the heat. So they play a game of ring around the rosy. Right now, it's time to take down the euro, and you're seeing the euro being pushed towards parity at an accelerated rate. When they're finished and it'll bounce a little, we'll start to see somebody else's currency will weaken. And they're continuing to weaken the currencies because the yuan Up until recently, the renminbi hasn't been an alternative. The Russian ruble, the BRICS or the other currencies that are not in that, who are trading higher and higher volumes, there hasn't been a flight to those currencies. But the problem we face with the dollar is we've got about $9 trillion on the wrong side of the trade right now. That is money that's been borrowed in the United States or borrowed in US dollars, went into emerging markets on the assumption that the dollar would weaken. Because the worst currency out there is the dollar, but it will be the last to fall, having said that. So they're on the wrong side as the currency is strengthening. The worst thing in a carry trade is to be on the wrong side of the currency in a strengthening currency. So the dollar is increasing, which is forcing them to try and cover in some ways, if I can use that description. But their economies are failing in terms of trade at an accelerating rate as they face these current accounts. So it's putting incredible pressures on the dollar. We've broken all sorts of major long-term downside or overhead support. In my opinion, and we do a lot of technical analysis, we think there is some consolidation correction coming in the U.S. dollar. It might be a little alarming and a little scary that's coming, but it is only that, a consolidation correction. We think the U.S. dollar still has further to go on the upside for actually all the wrong reasons. But that when the U.S. dollar starts to weaken, not in this correction, but a little longer term, that's when you're going to see hyperinflation. That's when hyperinflation will really begin, when there's a loss in the U.S. dollar. What would drive that? Really knowing there's a true alternative. The yuan, the renminbi, is, if it ever becomes, and they're trying to position as a real alternative, if they're successful with their position in the IMF and SDRs, for example, there might be, that might drive it. But if you get into China right now, they're in a position where capital formation is such a huge part of their GDP. It's not exports and imports. They net themselves out, and we know it's gigantic. But their real GDP is in capital that's coming in, and capital has been leaving China. It's been leaving the investment at quite a substantial rate. They've got to attract it. You can't attract it with a strong currency. You need a weaker currency. So there's incredible pressures there on their side, so I expect weakening in the yuan just to finish.
So on short term, you're bullish on the U.S. dollar. Could the trend
shorter term, real short term, I think there's still a little more here, but I'm actually bearish in the intermediate term. I think there's a weakness coming in that U.S. dollar. Longer term, when I say longer term, over the next 12 months, I'm still bullish on the U.S. dollar. Out a little further, 18 months, I think it's a serious problem. I could see massive, before we ever get out of the financial crisis that I see coming, and I do see one coming. And I think 2008 was a warning for this because we didn't fix the problems globally. And I'm not trying to be doom and gloom here. We've just got such serious imbalances around the world right now. And basically it's change trying to happen. Basically we're ignoring it. And it's going to fix itself. And when it fixes itself, one of the fixes is a realization that the US dollar is overvalued by a staggering amount. But to fix that problem is a massive global problem. It isn't a US problem. It's a massive global problem. And it's going to be forced to fix that. And that's going to be the problem. When that happens, that's when you'll see the hyperinflation in the United States.
So can I assume that because of that, you're also bearish or maybe staying at a level that it is with gold?
Well, yeah, I'm actually bullish on gold. And because I think that it's going to disconnect, because usually, it trades with the dollar.
Yeah.
And we all know the rules, but the rules are changing because I think some of the fear with the global situation is becoming more evident. And so I think that gold and silver, when they move, I think they're putting in a long-term correction consolidation here that's been going on for at least 18 months, 2 years right now. But when it breaks out, and it will, the gaps on a daily basis will be significant, but it'll be out of fear, and it'll be out of a crisis. And we don't know where that crisis is going to come. It could be geopolitical, it could be in the financial markets, and that's when it'll start to gap up. So gold and silver to me is not about an investment; it's an insurance policy. And I caution people with gold and silver, and I'm an owner, is that I believe that they'll come after us not to confiscate it like they did in the 30s, but the taxation, there'll be, at least in the States, there'll be predatory taxation or an attempt at it. But as long as you're in smaller denominated where you can trade it, you'll be fine. It's the big holdings that they're after. Okay. So unless you got all sorts of major bricks in your closet, you'll be all right.
Yeah. Gordon, last week, actually 2 weeks ago, Reuters GMSF came out with their third quarter report, and the World Gold Council yesterday came out with their report. And what I found fascinating in those two reports, and I was surprised a little bit because we expect increasing gold ownership around the world. The increase in central banks like Russia and China has been there, and there is nothing. What surprised me was the amount of gold coins sold in the United States, the explosion on a year-by-year basis of gold and silver coins in the United States. Could that have something to do with the financial repression that you are talking, that people are starting to... We also hear on the news very often famous economists, Summers and others, talking about digital, pushing the physical currency out of the system so they can control it. Rogoff also talked about it. Could this explosion, because it's quite a large increase on a year-by-year basis, with the price going down of gold?
Yeah, it's on sale right now. It's a very good time to be accumulating it if you happen to have a good view of what may be happening in the future. Yeah, what you're alluding to is what I'll call the war on cash. And when I said earlier that I believe the government is going to be forced into negative nominal rates on interest on bonds, as we're seeing with currently the $5 trillion out there of sovereign bonds, to do that, to get that down, to force it down, having cash really works against you. And as you recall, in the 2008 financial crisis, the issue was money markets moving their $5 trillion very quickly. So it was effectively a run on the bank. Every time we have a crisis, whether it's Cyprus, whether it's Greece, you'll notice the ATMs are immediately locked down and you only can get $200 out or whatever, and you're trying to live on it. So, because you can't take the cash out of the banking system or the banks start to collapse. You got to hold it in the system. And that's why we're actually have put in laws now that we have another banking crisis. We have bail-ins. They're going to take your cash as to keep the banks up. So there's more and more of a worry and an understanding that that's a strategy by the governments. You mentioned Rogoff. He was presenting in Dresden to the EU here a while ago on a cashless society. So they're actually, and I could bore you with the restrictions that are now in place, how much money you can move across the country, how much cash you can have. You're even being searched on trains in Europe of how much cash you got on you at any given time. You can't have cash in a safety deposit box. I mean, what is going on? Clearly, the best thing to do is if you went to a cashless society, it means, yeah, you transact on credit cards, but you never have cash. It's in the banking system. So you have effectively locked the money in the banking system. So, and by the way, then it could have bail-ins and you could lose your credit that you have at the banking system. So people are saying, well, what's the solution? Well, the answer is something that's outside the banking system, gold and silver in small denominated that I can trade and transact. People are smart. They figured this out. And maybe more sophisticated people are a little dumber, but the people who buy and sell on a daily basis understand this. And that's why in the United States there's such a massive barter system going on. Call it the black market or whatever. I'll trade you this, you trade me that. And they're trying to survive. We have 50 million people on food stamps here. Yeah, okay, so I'm boring you, but there's more going on. You're on the tip of an iceberg there.
Yeah. No,
and by the way, the numbers you just said.
It attracted my attention with that, and what you mentioned with the ATM machines. I see a lot of people talking about Greece. How did they survive? And I always remind them that they are more familiar with the black market, the Italians and the Greeks, so they had no problem in surviving. And because journalists were surprised to be in Athens and to see that there was no real panic on the streets and around the banking machines. It's because the Greeks and the Italians know very well how to stay out of the banking system.
Precisely. Exactly. And that's going on more and more around the world. But I draw your attention to the other point you said about the World Gold Council and the volumes of gold. Don't for a minute believe the statistics that China publishes on how much gold they own. It's much, much larger than they say.
Yeah, I was going to ask you last question that about China. We had their announcement update, so-called update.
Yeah, right.
But some of the official mentioned that in one of his statements that we also have a lot of gold under the people's hand, implying something that, and since I lived under the communist system, I know what they mean by the people in the people's hands.
Okay.
Yeah.
In that part of the world, in that part of the world, they actually tell their people to own gold and silver.
How do you see we are going to have an announcement? Supposedly it was pushed. It puzzles me why it has been pushed. The decision to include the yuan in the SDR. We had so many positive statements from the Treasury, Mr. Lowe, from Lagarde at the IMF, that it's almost done, that everything is favorable, in favor of that. And all of a sudden, we had a very discreet announcement that it has been postponed to the end of November. How do you see gold, the China accumulation of gold, I mean the official reserves, and at the same time the inclusion, the desire for China to have the yuan into the SDR, and could United States starting to do some kind of blackmail to China before they accept the yuan? How do you see the yuan, the SDR, and gold and all that?
I like your choice of words, blackmail, but there's a level of quid pro quo going on somewhere, somehow, and I don't exactly know what. It may be the South China problem they're now facing right in the islands, but China right now, China and others should be increased role in the SDRs. No question about it. It's long overdue. This is part of the imbalance I talked about earlier. But you've got the United States and the currency cartel, UK, Europe, pushing back on allowing that to happen because it gives everybody an alternative to those currencies. So it's not in their best interest. But the reality is it's got to happen because China, Asia is such a dominant part of world trade. Christine Lagarde's figured this out. She knows at the IMF it's got to happen. The question is when. And especially if we got to continue to grow credit, and she sees that credit is now imploding. And she sees the formation of the Asian Industrial Investment Bank for $54 trillion, and the money that's going to go in there separately. She knows that it's inevitable. So she's trying to make this happen, but she's got a tremendous amount of risk. It will happen at some point, but I would say it's going to take a crisis for it to happen. It'll drag out. It's not imminent. And under the auspices of a crisis, it will be seen as a solution of an adjustment process. And then maybe they're dragging it up because they see a crisis coming and they want to use it as the smokescreen. My personal speculation, but it will happen.
Well, Gordon,
it will be partially gold back.
Gold back.
I'll make that other comment. There will be an element, and that's why China right now, I believe they have north of 8,200 tons. Certainly north of 5,000 tons. I believe they're accumulating a rate north of 1,800 tons a year, minimally right now. They're doing that so that they can show that their currency can be partially backed by gold. I didn't say fully, but partially backed by gold and give it strength. By just doing that and including it in the SDR, it would actually create stability. And in a crisis, that stability may be the thing the global markets need. So the United States and the currency cartel, back to my expression, may be deciding this may be the worst of a number of evils right now. Mm-hmm. Okay. Does that make sense to you, Dan?
Oh yeah. Okay, Gordon, time is out. I would have liked to have an hour with you. You're fascinating to listen to. And I recommend people to go to GoldBroker.com. Your comments and your guests are just fantastic.
And
But it's
we
all the
enjoy.
time I have. So on behalf of GoldBroker and myself, I would like to thank you for accepting our invitation. It
Oh,
was a
thanks.
great pleasure to speak to you.
Thank you for having me, and thank you for allowing me to speculate with you. I've enjoyed it. Talk to you
My
again.
pleasure.
Bye-bye.
Bye.